The latest Apple stock pullback works to your advantage. After a mixed earnings report, Apple shares have experienced a modest decline in price. Some may view this move as the beginning of the end for Apple's 2023 resurgence, but making a full-on exit from this stock isn't the best move. Instead, if you're looking to make this a long-term buy and hold position, this latest pullback works to your advantage. Let's dive in. Apple stock's pullback, a golden opportunity for long-term Apple investors. Welcome to Timely Investment Research. Among tech stocks this earnings season, it's been a mixed bag. While some tech stocks have surged after earnings, others, like Apple stock, have pulled back following the release of their latest quarterly results. Sure, the post-earnings decline for Apple stock hasn't been all that severe. Shares in the tech giant have only declined by a few percentage points. However, despite some bright spots in this overall mixed earnings release, such as the performance of one of its units that will likely drive future growth, you may think this is the beginning of the end to Apple's hot run during 2023. While it's not for certain whether this FANG component will keep falling or start to pick back up, in the immediate term, if you are a long-term investor, it's best to view this latest move as merely market noise. Why? Let's take a closer look and find out. Apple stock results and the market's reaction. Post-market on August 3rd, Apple released results for its fiscal third quarter, ending July 1st, 2023. During the period, the company reported revenue of $81.8 billion and earnings of $1.26 per share. Although both these figures declined on a year-over-year basis and revenue came in only a few million below analyst estimates, earnings did beat expectations. Like I hinted earlier, there was a positive takeaway with the latest results from one of Apple's high-potential business units. That would be the company's services unit. Last quarter, services revenue grew by 8%, suggesting that a growth resurgence with this high-margin segment may be starting to take shape. Again, based on the post-earnings price performance of Apple stock, investors are seemingly focused more on the negatives than the positives. Admittedly, iPhone, Mac, and iPad sales did decline compared to the prior year's quarter. The tech slump clearly keeps weighing on results. Based on updated guidance, this is expected to continue during this quarter, ending September 2023. Yet, while the earnings release has and could continue to dampen sentiment for Apple in the near term, this isn't a reason to jump ship. Rather, it's good news for long-term investors. The weakness you've been waiting for. From January through the start of August, Apple stock experienced a moderately steep climb to higher prices. Although plenty hopped aboard this bandwagon, it's possible you skipped out on initiating or adding to an Apple position on concerns this run-up was not sustainable. However, the opportunity for more valuation-conscious investors to dive may be just around the corner. How so? The market could continue to absorb the prospect of continued soft demand for Apple's hardware products. Bearish updates to analyst ratings aren't helping and may place more pressure on Apple. All of this could lead to a moderate price decline for shares in the near term. That's not to say Apple will fall all the way back to $125 per share, but a retreat to between $150 and $175 per share isn't out of the question. If this happens, consider it high time to pounce. For those who get to buy, such price levels are a solid entry point. If you already own this stock, this is also a solid price point for increasing your exposure. Mostly because the factors that make Apple, in my view, one of the best buy and hold stocks out there have not gone away. Bottom line, seize the opportunity. Going into earnings, it wasn't unknown that Apple is experiencing demand challenges. It wasn't unknown either that this challenge could carry on throughout the rest of the fiscal year, ending September 2023. However, to say it's all downhill from here isn't a hyperbolic statement. Based on sell-side earnings forecasts, Apple remains poised to report improved earnings starting next fiscal year. As I have argued previously, in the longer-term expansion of the iPhone's presence in emerging markets like India, plus the continued growth of its services unit, alongside some of the company's chancier wagers, like the metaverse or self-driving cars, paying off means continued strong growth. For those who decide to seize the opportunity if it arises, if shares moderately correct, strong returns over a multi-year timeframe could be your reward for staying the course with Apple stock. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.